Welcome to our video on Section G, the financial report section of the capstone. Section G is going to be considered the narrative or written portion of Section F. Since there was no writing required in Section F, Section G is where you'll discuss the financial statements that you prepared within the Excel template. Within Section G, there will be three components that need to be addressed. You'll discuss the financial projections themselves and the assumptions created while developing the statements. You'll discuss your company's ending financial position and also your initial and future capital or investment needs. Now, the largest portion of Section G is going to be Section G1, where you summarize the financial projections themselves and the assumptions that were used in estimating the financial statements. There are essentially two different components that need to be addressed within Section G1. A discussion of the financial projections themselves, along with discussion of the assumptions used in creating the financial statements. In looking at the first piece, the financial projections, in this part of Section G1, you'll need to summarize the overall financial statements that you prepared in Section F. So this is looking at the overall categories presented on your profit and loss statement and your balance sheet, taking a look at the big picture that's presented within those financial statements. So in here you can summarize specific categories from both your P&L and balance sheet, such as talking about your overall average operating expenses, your company's total assets or liabilities at the end of the year, or the number of months operating at a profit versus a loss. We can see on this slide a couple of examples related to the financial projections side of Section G1, looking at the average operating expenses each month during the first year to prevent the need for any additional investments or loans. You can talk about the number of months that your company suffered a loss and why that was the case and what that means for your company going forward. Do you plan to have additional losses, or will you continue to operate at a profit after year one? You can see in the third bullet point talking about the company's total liabilities at the end of the first year and how that enables the business to take on future debt if they need it to expand. The second piece of Section G1 is dealing now into the details, looking at individual line items within both of the financial statements and the assumptions that were used in creating those particular amounts. So in here, it's a good idea to look at a few expense items from your profit and loss statement. Those that are really high or those that fluctuate a lot are great ones to choose from to explain how you came up with those numbers. And then a couple of items from your balance sheet, looking at maybe your ending inventory or your ending accounts payable and what is included in those amounts. So here we can see some examples of assumptions that you might have in creating the financial statements. You may talk about your utilities costs and what those are based on and how they're going to fluctuate according to the season. If you're selling a product, cost of goods sold is a great one to talk about. You can talk about how you estimated your cost of goods sold, the percentage of sales that your cost of goods sold is based on. If you have tax amounts, those are another good one to include the assumptions for. Are you using an average percentage for the tax amount? And then on the balance sheet side, talk about some of those items. We see the second to last bullet point, the company's ending accounts receivable balance based on two events during the last month of the year that have not yet been paid, or your ending inventory and how you determined what that final balance may be at the end of the year. Section G1 is really all about explaining those financial numbers and where they came from and why they might make sense if the business were to operate through that first year. Next in Section G, you'll be discussing your company's ending financial position after the first year of operations. So within here, it's a short summary, usually 1 to 2 paragraphs, that discuss where your company ended up and how that sets the stage going forward. They are going to be looking for a final financial figure, so it's a great idea to include your company's annual net profit loss from section F1 in order to support that financial position. You can see on this slide an example from our Sweet Treats Bakery, where they end their first month with a loss of $13,488, but they have a profit at the end of the year of $8,824. They discuss how their outlook is positive, even though they had several months of losses, and they discuss why those losses occurred within the business's first year. Now, this is a great spot if your company did end up with an overall net loss to discuss what that loss means for your company going forward and when your company expects to be profitable in the future. The last part of section G, your company's estimated capital and investment needs, will discuss both the initial needs of your business along with any potential future needs. The initial capital needs will be based on the losses that your company may have incurred during the first year, along with startup costs and any large purchases that your company needed. So you will want to make sure that the amount included is enough to cover all three of those items. Now, they are going to be looking for some pretty specific information in regards to your initial needs. They will want to see an exact dollar amount. So did your company need $100,000 or $1 million to get started? They'll want to see where those funds are coming from. Are these funded through investments or are they funded through loans? And they'll also want to see what those funds were used for. Did you purchase particular pieces of equipment with them, or did you just have some cash on hand to cover losses during the first year? Now, with your initial needs, you will want to make sure that they match what you have on your balance sheet. So if you say that you're going to have $50,000 in investments, they will be looking to see that you have that owner investment of $50,000 in the equity section on your balance sheet. If you talk about taking out a loan, they're going to look to see that the remaining balance of that loan at the end of year one is included in the liabilities section of the balance sheet. In addition to initial needs, you'll also want to discuss any potential future needs of your business. If you're planning to expand in years 2, 3, or 4, you may need some additional loans or funding in order to make that expansion happen. You don't have to go into as much detail in future needs, but you will want to mention if there are any future amounts needed to operate the business. We can see on this slide an example for the Sweet Treats Bakery, where the company had $50,000 of personal savings invested into the business, along with a $10,000 loan, which was paid down to $7,500 at the end of the year. So we would expect to see on the balance sheet a $50,000 investment in the equity section and a $7,500 loan balance in the liability section. I hope this presentation's been helpful in working through the financial report section of the capstone. If you do have any questions or concerns, please don't hesitate to reach out to any of the course instructors.